please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Joining us on the show this evening to discuss all of what we can expect for next week and how this week panned out is MD and CEO of Bank of Baroda Capital Markets, Ratnesh Kumar. Ratnesh, hi, thank you very much for joining in on the show. So overall, we are at 10,800 for the Nifty. There's been a tad bit of recovery, but where do you probably see the Nifty go from here on? Is it probably going to consolidate, or are we going to go back to 11,000?
Yes, one correction. It's BOB Capital Markets, or Bank of Baroda Capital Markets. And one other really important thing also which happened last week, this week actually, as it is ending, is the start of the World Cup football. So hopefully, that gets the market going in a better mood. But some of the opening comments that you all had made, actually, if you stretch it for the rest of the year, there are going to be some really solid sort of trends which will run through the year. It won't be just for the last week and the next week, which is that US dollar strength, greater flows into the US and out of the emerging markets. And actually, we're looking at equity flows. What is in fact more relevant for the currencies are the debt flows. The debt flows, in terms of the foreign flows out of the emerging markets are much more larger. And that is having an impact on the currency. So I think those trends will continue. But to start with, on a positive note, I do remember seeing some pretty comprehensive analysis over the last 100-200 years. Is the U.S. Fed in the initial part of the rate hikes tightening period, stock markets actually do well, and the reason being that those initial steps of tightening rate hikes are a response to growth coming back, and equities like growth. So I think, to my mind, we are in early stages of rate hikes, especially in India, which is also a reflection of growth coming back, and that is what my focus will be. I think if I was to set out the trend for rest of 2018, rates going higher in the US, rates going higher even in India. Probably there's one more rate hike remaining. Maybe it happens in August or in October MPC. But all of that is going to be a reflection of growth going higher and inflation going higher. And a little bit of inflation is actually not too bad for businesses. And those will be the underlying trends, I think, for India as well for the rest of the year.
Do you see more than one more rate hike by the RBI?
No, I think one is what we expect.
So it's not a deeper rate hike cycle?
Not this year. And what will also happen is that towards the end of this calendar year, early next year, there is going to be some impact from the political, noise which will be there. And so to that extent, one is what we foresee right now.
Where does it leave us in terms of stock markets, Ratnesh, in the near term?
Well, I think it is going to be a challenging period for the market if I look at the next 9 to 12 months. Simply because of the fact of the news flow that you have from the macro end. Naturally, we have come a long way in terms of domestic savings going into equities, but as a stock of money in the market, foreign money is still 70–75% of the institutional money. And what we have seen is, naturally, over the last 1 or 2 years, domestic flows substantially overtake the foreign flows, but foreign flows are still big, and it has an impact. And I think for the rest of the year, for India as well as all the emerging markets, getting back into the positive territory as far as the foreign flows is concerned is going to remain a big challenge in the environment that we have. So that is what is going to be one major driving factor, in addition to political noise which will come maybe 9 months, 12 months later. Ironically, this is going to be happening at a point in time when actually companies and businesses are going to be doing much better over the next 9–12 months than they have done in the last 9–12 months. Economy is going to be on a higher growth path. Businesses and sectors, some of the key ones, will be on a higher growth path. But stock market will find performance challenging during this period, simply because it is very tough to expand your valuations when the flows, at least one part of the flows, are challenged in terms of foreign flows and rates are going up.
Jubilant Food Box is at a fresh high, and you coincidentally also spoke about the World Cup. Basically, this whole urban consumption theme that is playing out very strongly in the markets, how should one probably take advantage of that?
I think it is going to be a sustained theme for not this year, not 1 year. Elections will come and go. I think the urbanization, increasing urbanization, and to that extent increasing urban consumption, that is going to be a sustained trend for companies and the businesses which are in that space. From the investor's point of view, it is more about getting in the right companies at the right time, so that they're not like they don't suffer from any kind of overvaluation spike, etc. But the broader question that you asked about consumption, especially urban consumption, even when there is growth in rural consumption, there is still pickup in urban consumption. So that is going to be a sustained theme, not just for one company, but all the companies which are playing through in that, be it in the housing space, be it in the restaurant space. And I think the key there is to look for plays which are not over-leveraged kind of businesses. Businesses which feed on consumption rather than asset building. I think that is what I would focus as a theme there.
So in terms of so consumption would be, I guess, one of your top bets broadly,
Well, right now at this point in time, I think looking a couple of years, 1 to 2 year kind of time horizon, having a sort of election in the middle of all of that, my play would still be for a domestic recovery, strengthening and broadening. And so playing on the domestic recovery, even on the investment part of it, gradual recovery is already being seen. And as dark as it looks in terms of the investment cycle and the lack of credit expansion which might have been there in that space, in the industrial space, I think a lot of the problems are coming to a head now, and with some resolutions taking shape in the IBC process and businesses seeing growth back, I think the broadest theme that one needs to play in for the next 1 to 2 years, to my mind, is the domestic recovery.
And domestic investment recovery.
Domestic recovery, both consumption recovery and investment recovery. Naturally, investment is coming off a rock bottom, so the recovery there is...
Because, I mean, when you talk about consumption, there is no problem there. I mean, look at lever multiples or I mean, Jubilant Food, for example. So the one where there is potentially upside is the investment place. Investment
recovery. So what you are actually already seeing is some of the sectors, steel, cement, construction, autos, you are seeing good growth coming back. And to my mind, this is just the early phase of that growth recovery, because you've just seen 1 or 2 quarters of economic growth. Some of that could be also base effect. So the real growth recovery is ahead, because impact of demonetization, GST, all of that has been sort of now built in. And
could one look at corporate banks as a play to play that theme?
Corporate banks will be still a little early.
Okay.
I think you have other sectors that you have where that growth recovery is already visible, as I mentioned, in steel, in cement, in autos, auto ancillaries. Consumption was never too far down, so it is not coming off that much of a bottom. But these other areas is what I think you need to focus on. Housing, for example. Housing is also going to grow as part of the domestic recovery.
This whole pharmaceutical rally that we've seen, are you convinced about, say, a sustainable recovery in these stocks?
So I have limited understanding of pharmaceuticals, I think, but jokes apart, I think pharmaceutical, most of the play is on the US news flow. And, stocks may perform from time to time, but I think that doesn't fit the overall domestic recovery theme that I want to play over the next 1 to 2 years. So I would leave that to some of the sort of more of experts on the pharmaceutical side, but my focus is actually playing more on the domestic recovery side, and there you'll get more delta. Compared to a pharmaceutical.
Linked to that, I mean, the other part of pharmaceuticals would be healthcare, hospitals, diagnostics. We've seen some amount of interest coming back within that. It's parallel to say that urban we've seen some amount of interest coming back within that. It's parallel to say that urban consumption theme that you're talking about. People want better hospitals, people want better sort of medical care as well. Would that be something that you would look at, say, from a domestic recovery point of view?
So healthcare is actually, it is going to be probably more of a secular growth trend than urban consumption, because of the fact that how far low we are in terms of the healthcare existing facilities and the requirements which are there. The challenge that equity investors have faced in the healthcare space is actually how to invest where the model is not asset heavy or over leveraged. And so what you've seen in healthcare is some of the great stories actually fizzle out simply because of being over heavy on the asset and over leveraged. So if we can find models which are not excessively leveraged, so you have diagnostics, for example, they are somewhat more asset light models. I think those kind of businesses have great possibility of returns for equity investors. Growth is going to be there. The question is, can equity investors always identify the risk points in an over-leveraged or excessively leveraged part of the business, which is the hospitals?
Sure.
That is always going to be a challenge. Otherwise, business, if one can find in healthcare, lower asset cost model, even in hospitals or in other sort of ancillary services, medical services, I think that is going to be a winner.
Long runway there. I want to push you to just before we wrap up, 3 top bets, absolute return top ideas from you.
So stocks, I don't sort of take names, but essentially, I would
because we have the themes already. So which is the domestic investment recovery themes.
I think domestic, within domestic recovery, my top themes will be in autos and in construction.
Autos, OEMs or ancillaries?
Both. Autos, OEM, ancillary. Ancillaries, in fact, some of them have got beaten down with the value emerging in this mid-cap correction which has happened, as well as construction. You're seeing good activity happening in housing as well as infrastructure